Hi there. So today we are going to talk about 4 ways to save money on your mortgage payment. If you're planning to buy a house anytime in the near future, I encourage you to stay tuned because this could save you hundreds of dollars per month. Knowing these things could save you that money and potentially even over $1,000 a month. That's significant, especially in today when everything costs so much. We got to save money where we can. So let's jump in. Mortgage payment. There are 5 components that make up a mortgage payment. Principal, which this has to do with the price of the home, paying it off, the interest rate, property taxes, homeowners insurance, and PMI. So let's go through these and take a look. Most people, when going out and buying a house, when they're home shopping, they're paying attention to that principal part, right? The purchase price of the home. I've been doing this over a decade. And when I talk to people initially, ask what they're looking for, and I ask their budget, how many times do you think somebody has told me what their monthly payment needs to be when we're having that discussion? In over a decade, just one person. So, and I get it when you log on to a search site, Zillow, or wherever you're looking at houses, when they don't ask you what do you want your monthly payment to be, it's you're limiting it by purchase price, right? And a lot of people don't even are they're not even sure what the purchase price. I think they come up with a number. This is where I'm comfortable, and that's what they let me know. And it's a great starting point. You got to start somewhere, gives me a good idea of what they're thinking, where they're at, but there's some fine tuning to be done there. And so let's go ahead and talk about those other things. The thing that I want you to concentrate on right after principal is the interest part of that. So when it comes to interest, sorry, I'm looking at my notes here and don't want to get lost where I'm at. When it comes to interest rate, a lot of people think, well, the interest rate is what it is, right? At the time. I mean, we talk about interest rate all the time. What's the current interest rate? I have a lot of people ask me, well, what's the interest rate right now? And yes, there is, like a interest rate that's like the average of what's typical for certain types of loans right now. But that doesn't mean that's the interest rate you're going to get. There's a lot of factors that go into that. And the number one piece of advice that I want to give you when to get a good interest rate is to shop lenders. Don't just apply for a loan with one lender. Go to, I suggest minimum of 2, but maybe 3. You're already digging out all your paperwork to give to one lender. Why not be giving it to another? Let them know that they are competing for your business so that they can be getting you the best deal that they can, maybe looking at different loan programs, but definitely shop around. Interest rate can vary quite greatly between lenders. It's not the only reason to pick a lender to go with. Maybe I'll make another video about that because picking the right lender is very important. But like I said, you could save some money shopping around, and as long as you do it within like a month time frame. But like I said, I suggest doing it all at once. It's not going to hit your credit as a whole multiple times. It those reporting agencies realize that you want to shop around, so they're not going to ding you for shopping for the right lender and a good interest rate. um, all right, number 2, consider building a home, buying a new built home. The builders out there, especially right now, are offering so many interest rate incentives, and some of them are very good and very competitive. So I definitely suggest looking in that direction and seeing what deals you can get there. And the next thing to consider is an interest rate buy down. And of course, you can buy down your rate permanently. That's not always a good idea in the case in fact, many times it's not gonna be beneficial for you, especially if you're not gonna live in the home a really long time, and you may refinance, and then it doesn't make sense, but there is like really popular right now is a temporary rate buy down. Now, this has to be paid by the seller, so, if you find a house you like, that's an option to ask the seller to buy down your rate. And I just totally lost my train of thought. I had more to say on that. Oh, I was gonna say, uh, this is often something that a seller will agree to the longer the house has been on the market. So, if the house has been on the market, it's the first weekend and you're asking them to buy down their rate, they may not be so willing to jump at the chance to do that for you. But if you find a house that you want and it's been on the market for a little bit of time, sellers are going to be typically a lot more willing to help you out there. So keep that in mind. All right, moving on to my next point, and the next factor that makes up your mortgage payment is property taxes. Man, you gotta pay attention to property taxes. And I'm not saying you don't look at them when you're looking at properties, but like how extreme that they can vary is crazy to me sometimes. And a lot of times it's one neighborhood sitting right next to another neighborhood. And it's crazy how much they can vary, and I'm just gonna give you one example. So last year, I listed a home that was comparable in price to my own home. In fact, it was actually probably valued at probably about 75,000 dollars less than what I could sell my house for. And, so my property taxes, and now I'm getting personal. My property taxes are about $4,400 per year. Well, this other home, like I said, valued a little bit less than mine. Their property taxes were over $12,000 per year. That is a significant difference. When you most mortgages, they include your property taxes, so you're paying that to your lender every single month, and then at the end of the year, they are making sure your taxes are paid. So 12,000 and 400 compared to $12,000 a month, which would be $1,000 or $12,000 per year in property taxes. That's $1,000 per month. Uh, Whereas you look at my house, and if I was paying my lender, that for my property taxes. Sorry, I'm getting some tongue tied here. That's $400 a month. So we're looking at a difference of $600 a month on homes that are, pretty close in value. So pay attention to that because it can make a big difference in the house that you can afford. All right, moving on to number three, and hopefully I'm not as tongue-tied. Homeowners insurance. This too, just like lenders, shop around. You know, ask about discounts. A lot of homeowners insurance companies will give you discounts for if there's a security system or a bundled discount. Maybe you, of course, go to where you have your car insurance, get the rate from them along with a couple other insurance companies, or a discount for like hail resistant shingles. Sometimes you can get, especially in Colorado where hail damage is a big deal, you can usually get a discount on your insurance if those are the type of shingles that are installed on your house. So there again, I told you with lenders, the insurance rate that they're offering isn't the only reason to pick a lender. I fully feel this way with homeowners insurance as well. I know people can have very different experiences when something goes wrong. That's why you have insurance, right? You're fire in your house or something, you want somebody who is going to be by your side. And people, like I said, people can have very different experiences with different insurance companies. So don't um, skimp out on the quality of the person that'll be by your side if something happens, but do shop around for prices and understand what you're getting for your dollar. Okay, number 4, PMI. PMI is private mortgage insurance. And basically, you are paying each and every month to basically ensure the lender that you are going to pay your mortgage, and it's used in to cover the people who don't pay their mortgage, basically. And so if you can avoid paying it because it is in the hundreds of dollars per month. So how do you avoid paying PMI? Well, first of all, you need to have a conventional loan and you need to be putting a minimum of 20% down. So if you're able to do that, it's going to save you a lot of money monthly. And unfortunately, if you have an FHA loan, you cannot avoid PMI. If you do need to go the FHA route, once you are confident that you have paid off the value of 20% of your home, then at that point, I would highly suggest refinancing into a conventional loan to get rid of that PMI insurance. Um, so some people just can't avoid it. Home prices are high, especially if you're a first-time home buyer. Saving up 20% down on a house is daunting. So if you can't avoid it, don't let it discourage you from purchasing a house. But if you can avoid it, do it. All right. And I said 4 ways to save money. I'm just one more thing to pay attention to. So really bonus number 5. HOA fees. HOA fees can make a big difference in your monthly expenses. It's not included in your mortgage payment, but be sure to be paying attention to that when you're out shopping for houses. And in my neighborhood, for example, there's kind of a mix of different kinds of homes. I live in a traditional house, but right across the street from me, there are low maintenance houses, meaning they take care of snow removal and they do landscaping. They pay significantly higher HOA fees than I do, and they're living right across the street. So pay attention to those HOA fees and find out what it includes. I know here we're in the Denver area, most of them include things like trash and recycling and stuff like that. And, do you get a pool and clubhouse trails? What's all included in there and for that fee you're paying? So, all right. So like I said, there is a lot to pay attention to on each property you're looking at, picking the right lender, homeowner insurance company, but really if you're paying attention to all these things, like I said, you can save yourself hundreds of dollars per month, maybe over $1,000. And and if you are looking to buy a home, give me a call so I can help you navigate this per property that you are looking at. We can really break it down and take a look at each one. And be sure that you are working with a realtor. If it's not me, be sure that they're helping you guide you on each property that you're looking at to save you that money. Like I said, life is expensive right now. A lot of people think homeownership is out of reach, but there are things you can do to make it a little bit easier on yourself. My name is Courtney Murphy, Denver Metro Realtor. If you are shopping for a home and you want somebody by your side who is paying attention to all this stuff, definitely give me a ring. Love to talk to you, see if we're a great fit to work together. And, if you're not in the Denver area and you're shopping for a home and you don't have a good realtor that or work with, same thing. Feel free to reach out to me so that I can help you find someone in your area with experience who can help you really break all these things down as well. All right. Thanks for joining me today. And I hope you have a super day.